Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is September 30th. Canadian gold producer Torex Gold has had an exciting year to date, including the launch of a multi-year exploration program and positive drill results. Located in the Guerrero gold belt in Mexico, the intermediate gold producer has caught the eye of the Red Cloud research team, as they recently launched full coverage on the story. Managing Director of Equity Research Stewart is here today to provide details on the news. But first, Managing Director and Head of Equity Research David Talbot has some updates on CanAlaska's recent drill results at their Pike Zone on the West McArthur Joint Venture project. So with that, David, what's top of mind for you?
Thank you for that introduction, and welcome to episode 76 of Red Cloud Securities Research Roundup podcast. I'm David Talbot, Managing Director and Head of Research at Red Cloud, and I'm pleased to join you today as part of an ongoing series of discussions with the Red Cloud research team. Ron Stewart will speak about his Torex Gold Resources Initiation Report, and I will speak to CanAlaska Uranium, my top pick in the sector right now. Gold prices continues on its tear, spiking back up above $26.70 per ounce. Late last week, up 7% for the month. There is investor interest in some of the larger cap stories, so Ron's discussion will be timely. Uranium too caught a bid last week and was up to $81.75 a pound by Thursday. China has launched some stimulus measures to help boost its economy. SMR, or small modular reactors, appear to be gaining traction, and both Microsoft and Google have both considered powering AI directly by nuclear power. And the uranium stocks have started to respond. So how do we take advantage of this potentially higher uranium price? Picking good companies with top management and exciting projects is my pick. CanAlaska, CVV on the TSX Venture, fits the bill and is currently our top uranium pick. We recommend the stock with a speculative buy and no target price. Now, CanAlaska is an investment banking client and a market-making client of Red Cloud. CanAlaska continues to hit on its very high-grade Pike Zone discovery on its West McArthur JV property, a site that we recently visited in the eastern Athabasca Basin. We have spoken about this name on numerous occasions, and results continue to impress as its summer 2024 drill program ends. CanAlaska discovered high-grade basement mineralization and called it the Pike Zone during the summer of 2022. The project is located 30 kilometers west of Cameco's McArthur River mine, which hosted 675 million pounds at 17% U3O8. We do not rate Cameco. It is also located along trend and to the west of Cameco's Fox Lake deposit, 68 million pounds that grades 8%. The initial Pike Zone discovery in the basement was deep but impressive. Located about 6 kilometers west of the 42 zone on the C10S corridor, the discovery hole 67 intersected 2.4% over 9 meters, including 3.5% over 6 meters, located over 100 meters into the basement. Subsequent drilling returned 4% over 2.3 meters, which included over 25% over 0.3 meters. Now, these results were spectacular, and mineralization appeared very much like, if not even wider than, uranium found at Cameco's past-producing Eagle Point mine near the Rabbit Lake Mill. The only drawback we saw was depth, at about 850 meters. And this is one of the reasons why management decided to start tracking the basement-hosted mineralization up-dip towards the unconformity. In late 2023, hole 82-2 hit 1% over 6.3 meters just below the unconformity. And in February 2024, CanAlaska intersected ultra-high-grade mineralization at the unconformity. Hole 82-4, let's call this the new Pike Zone unconformity discovery hole, returned 13.75% over 16.8 meters, including 40.3% over 4.7 meters and 13.5% over 2.4 meters. This is a spectacular hole that found uranium mineralization that is massive to semi-massive, blebby, disseminated, clay-hosted, and fracture-controlled, with associated yellow secondary minerals. The lower sandstone was strongly bleached, limonite and clay altered, and contained several fault zones, quartz dissolution, and dravite. Furthermore, the unconformity horizon was offset by a reverse fault. And these are all the features you hope for in the Athabasca Basin uranium deposits. Features that indicate ample hydrothermal fluid flow and help prep the rock and set the proper chemistry for uranium precipitation. Early 2024 drilling, the focus was on filling out the discovery section L70 East and a small 15-meter step out to the east of that on section L85 East. L70 East follow-up drilling outlined about a 40 to 50 meter wide zone of high-grade uranium. Hole 6 was a great follow-up hole at 14.9% over 9.6 meters. The deepest and thickest intercept on that section, hole 7, returned 3.5% over 21.6 meters, including 10.9% over 5.4 meters, and that was well located into the basement rocks. Results were similar on L85 East. Holes 11 and 12 both hit uranium at the unconformity, with other intercepts extending well into the basement. Width of the zone on this section might even be wider, at perhaps 50 to 60 meters. Highlights include 9.3% over 16.2 meters, including 13.6% over 10.9 meters from hole 12. Hole 11 returned 4.8% over 25.9 meters, including 6.3% over 16.3 meters. These two sections largely remain wide open along strike and down dip into the basement. Further, very positive drill results were provided earlier last week. A new parent hole was sunk about 100 meters to the west and went on to discover a new pod of mineralization. This target was actually more about drilling up dip of the previously discovered Pike Zone basement mineralization than it was drilling along strike of the Pike Zone unconformity discovery. Either way, results were again exceptional. Hole 94.1 returned 3.4% over 9.9 meters, including 8.0% over 3.7 meters on line 15 west. 94-2 hit 3.8% over 13.2 meters, including 23% over 2 meters. Overall, we now have 12 holes drilling into the Pike Zone's two pods at L70 and L85 East, and again at L0 East and 15 West. And a big gap is between the two areas. The zone is open in all directions, including 1 kilometer of open ground to the west of the westernmost pod. This news is very positive and highlights a step change in uranium potential at the Pike Zone unconformity deposit. Whether these results have identified a new pod or extended the original unconformity discovery, the results are positive, as it demonstrates additional ultra-high-grade uranium over a good width in a small space. Now, last week's press release spoke to the identification of a new pod. Now, these two areas may or may not be connected. It is true that many Athabasca Basin deposits, whether at the unconformity or within the basement, occur in clusters. Some are stacked parallel zones like you see at Arrow, but most occur as pearls on a necklace, and these deposits are really a series of zones that occur along a structure within the Athabasca Basin. Think McArthur River, Midwest, J-Zone, and Rough Rider. Triple R is actually 5 zones over a 3.7 kilometer trend. So while CanAlaska's recent drilling appears to have identified 2 pods located 100 meters apart, they are drill limited. There are 2 early holes drilled within the gap between the 2 pods, and they both had uranium mineralization, but not necessarily ultra-high grades. They weren't targeting a known zone at the time those 2 holes were sunk, but it is possible that further drilling may fill in this gap. And management even concedes that the 2 zones may be connected, which would be ideal, but it will need to be drilled to find out. So the importance of closing the gap, it would make one long strike. And that too is common. I'd say more common with unconformity deposits like we are currently looking at with the Pike Zone. Take in Cigar Lake, for example, it's about 1.95 kilometers long. Phoenix is about 1 kilometer long, and Hurricane is 575 meters long. And did I mention the Pike Zone at the unconformity is open in all directions, including 1 kilometer open ground to the west? It is too early to speculate on how large this deposit might become, but we already believe it might have exceeded 25 million pounds and grade about 5.5% on average. We are waiting for specific gravity test work that will help us with the accuracy of our mineral inventory estimate. Uranium is dense and therefore heavy, and thus you can find a lot more tonnage of mineralization in a given volume of rock. So this really means more pounds in a smaller footprint. So grade really matters when you're talking about high grade uranium deposits. All summer results are in for the gamma logs, and we await final assays. But given CanAlaska's homework before the summer program started, finding a well-calibrated radioactivity measuring tool that can handle these ultra-high grades, we believe the grades reported this summer will be fairly accurate when it comes time to reconcile assays to the downhole gamma logs. CanAlaska has about $12 million in cash. Now we expect management to wait for assays, model what it has, and then design an aggressive 2025 exploration drill program with the goal of both expanding known mineralization and finding additional pods or zones along strike. We will continue to closely watch what has become one of the most exciting projects in the Athabasca Basin. In the meantime, look for results from CanAlaska's other projects, including Moon Lake South JV. That is all for me this week. Let's talk about gold with Ron Stewart.
Thank you, Dave. Thank you for joining us this afternoon. My name is Ron Stewart. I'm a research analyst at Red Cloud, and I'd like to share some of the observations and thoughts that I had about Torex Gold Resources, a company that I recently launched full coverage on. Torex, TXG on the Toronto Stock Exchange, is trading around $26 per share right now. We have a buy rating on the stock and a $31.20 target, which is about in line with street consensus. Torex is home to, in the home stretch, to developing the Media Luna underground mine, which will transform their deposit and business from an open pit and underground mine, El Limon Sur, to a combined copper, gold, silver mine that can last as much as 10 years. Morales, the mine, is in Guerrero State, Mexico, and has been operating since 2016. From the start of mining, they've produced 3.4 million ounces at an all-in sustaining cost that has ranged from a low of $800 an ounce when they started to around $1,200 an ounce right now. Now it's gone up. There's no doubt about it. But our view is it's gone up at a compound average growth rate of about 5%, which is below industry standard of 8% over that same period. And despite the fact that costs are in the order of $1,200 all-in sustaining costs right now, that's still in the lowest quartile of the gold producer industry. Year to date, the company has produced 230,000 ounces at, like I said, all-in sustaining cost of around $1,220. They are in line to meet their guidance for the sixth consecutive year. Their guidance this year is 400 to 450,000 ounces of gold at all-in sustaining costs of around $1,100 to $1,160 an ounce. Now, admittedly, their costs are a little higher than what they had forecast, but most of that is due to strength in the Mexican peso. So we'll give them a bit of a pass on that. In the first quarter of 22, a couple of years ago, they approved the development of the Media Luna underground mine and embarked on a capital development program to bring this into production. At the time, they saw the Media Luna as extending their mine life out to about 11 and a half years. And prior to that, one of the knocks on Torex was that it always was looking at a relatively short mine life. But now that it's established the Media Luna as an opportunity, they certainly have a decent mine life. Media Luna itself will be a large underground mine. 7,600 tons a day will be pulled from that mine and transported via a tunnel with a conveyor belt over to their processing facility, which was built for the original mine. But they've had to rework that processing facility to add a flotation circuit and concentrate producing system so that they will produce a copper, silver, gold con in addition to gold doré. The estimated cost of this whole project is about $950 million. Now, it has gone up since they originally approved it. They started off saying that it was going to be $850 million. The change in $100 million capital cost was due to changes in the scope of work. It wasn't due to inflation or mispricing. It was basically out of scope items. Under the current plan that the company has, they're going to suspend mining and processing in November, but that's baked into their guidance for the year. So they're going to have about a 1 month shutdown while they tie in the new milling circuit. They have provision in their plan to push that shutdown out a little bit in the event that long lead time items aren't on site and aren't in place. So they may push that back into December or even January if they have to. But as it is right now, we're looking at a November shutdown for about a month for them to change over the mill. Under the current reserve plan, they're forecasting a mine life that'll extend through to 2034. We see it as being able to extend further than that. Our model takes the mine out to 2036. We believe that there's excellent opportunity for them to expand it even beyond that. Last year, the company instituted a multi-year exploration project to extend the mine life. And right now they have provision for $30 million worth of exploration to complete 90,000 meters worth of drilling, focused between the Media Luna cluster and the El Limon Guajas cluster, which are the two main reserve centers for the mine. They're also going to do another 3,000 meters of drilling outboard on the rest of the property on areas that have never been previously tested. Based on what we can see when we look at these results, the opportunity for them to expand their reserve and resource are excellent. Right now, they have a total reserve base of 5.6 million ounces. That's 43 million tons at about 4 grams gold equivalent. The resource itself, combined, measured, indicated, and inferred, stands at around 10 million ounces gold equivalent, including 7.9 million ounces of measured and indicated and 2.2 million ounces of inferred. So they have a significant resource base that is greater than their reserves. Over the course of the next 6 months, Torex is going to transition, as I say, from being a pure gold producer into being a copper, gold, silver producer. And so that transition we see as a relatively high-risk phase for this project. But we believe that they're going to achieve it. This management team has basically delivered on every objective that they have set since the mine started. Our model currently sees them as being able to produce over 450,000 ounces of gold equivalent over the next 9 years through to 2035 and then fall off beyond that. We think that Torex is approaching a dawn of a full moon rising at Media Luna. Our coverage suggests that the share price can move up to $31.20, but we discount our net asset value by a factor of 0.9 times to take into account the near-term risk of the changeover. In terms of upcoming catalysts at Torex, there are quite a few. We'll see Q3 production come out. Our estimate for the quarter is 118,000 ounces at all-in sustaining costs around $1,290 an ounce, earnings per share of 53 cents, and cash flow per share of about $1 per share. We should expect ongoing exploration results from the 90,000 meter drill campaign. We'll see them change over their mill circuit and initiate commercial production from Media Luna by Q4 24. Now, as I say, that might get delayed a little bit, but I don't think that that's going to be a big issue. They will meet or exceed their 2024 guidance of 410 to 460,000 ounces. And while the costs might come in a little higher than their $1,100 to $1,160 range, we still think that they are going to be securely in the lowest quartile cost of a producer. Torex should return to free cash flow in 2025. And in our model, looking forward using $2,000 gold, Torex is going to generate over $250 million US in free cash flow over the next decade every year. If we use today's gold price of $2,600, that number increases to $350 million in free cash flow over the next 10 years. So that's $3.5 billion that can either be returned to shareholders or used to grow the business. They are looking to tie in the EPO deposit. It was a new reserve that they added just in September. That will come online in production in 2026. And going forward, by the end of 25, we would expect that Torex will have a dividend to return money to shareholders, have a share buyback project plan in place, and they are looking to add other assets to the mix. So in terms of a company to look at today with the gold price and copper price moving the way they are, we think that Torex is a solid win. That's all I've got for Torex.
Thanks for listening to the Red Cloud Research Roundup podcast. We hope you enjoyed this dive into recent notable mining news. Remember that you can join us every Monday for new episodes, and as always, you can head over to redcloudsecurities.com to read all the research reports discussed for all Red Cloud Securities free research reports and to sign up to our email list. That's it for this episode, and see you next time.